Amidst optimistic investors are said to be optimistic about the Nigerian Exchange that's said to be experiencing a bullish week now, resulting in a rise of 295 billion naira in our market capitalization. When we see the all-share index, it closed at 97,722.28 points, up from 0.50% for 30.69% year-to-date return. Strong purchase in interest in flour mill, Owando, and Guarantee Trust Holding Company were important motivators. After positive Q3 earnings reports, analysts credited the gains to portfolio rebalancing and sector rotation with 1.068 billion shares. Financial services accounted for more than 72% of the trading activity. Consumer goods and oil and gas also made a substantial contribution in that regard. Now, due to persistent economic uncertainty, investor caution persisted despite the improving trend with more decliners than gainers in the overall market. So this morning, to help us understand this better, Muktar Mohammed, CEO, Asher Investment Ltd, joins me. Thank you so much, Muktar Mohammed, for joining us on the show.
Thank you for having me, Lekon.
So for you, what factors would you say led to the Nigerian Exchange turning bullish this past week, and how sustainable is this positive momentum?
Well, I think we are seeing, like you said in your report, we are seeing price revaluation, good entry point, good exit point. You mentioned Owando. You could see the investors are beginning to see a good entry point in that stocks. Also, you mentioned flour mill also. So investors are keen into the numbers that have come in going forward. I think what we are looking at is forward investment. If you look at those stocks that you just made mention of. But again, what have been really interests me is the data that has come in from the NGX. And those data have been very impressive and tells you that foreign investors have left Nigeria. Most of them, a lot of the investors left Nigeria with tune about 41 billion. And yet the market has been very stable. So that's a credit. And again, when you look at those numbers again, you see that a lot of retail investors, which also give credit to the market. Also, we're having more retail investors than even institutional investors, though they have their disadvantage of having retail investors. But what it means is that most Nigerians, despite the economic hardship, are still looking at means of investing, which is very, very good. So most of the bullish run that you see being sustained is as a result of the inflow of retail investors. And this is largely driven because of the recent activities, especially activities in terms of from the banking sector, public offers, that a lot of investors are beginning to look at the stock market again after a very, very long time. So I think the exciting thing is still there, that investors are still looking at this market, and this is largely driven by retail investors, increased even by the month, according to the data, by 54.something%. So, and foreign investors outflow was about 27.something%. So you can see that that also excites the market. So what it means is that Nigerians are beginning to take ownership of the equity market, and which is very, very good. That could be what is responsible for the bullish run. But again, like I said again, you need to look at price variation. You need to look at good entry point. You need to key into the year-end result. And you see that a lot of investors are beginning to key into the year-end result because third quarter result is out. There's a perception already what fourth quarter will look like. And that's why you're seeing this movement, especially in a stock like Guarantee Trust Bank. And the banking sector also, you see a lot of volume in that sector, driven largely by the public offer issue, and also by the issues of the result that came out, the third quarter results.
We've actually praised domestic activities, but then we've also seen sector rotation and portfolio rebalancing. Did they also play any vital role, any noteworthy role in driving the market's performance, particularly in the oil sector, because you mentioned the banking sector also?
For the oil sector, we've seen a lot of activities. Again, if you look at that chart, you've seen that Owando, after the lifting of suspension, has gone down. So it has created a good entry point for a lot of investors to come in. In that oil and gas sector also, you shouldn't forget that you're seeing a new entry there, Arada, and that seems to be taking investors also. That also is helping to see the kind of movement that you're seeing in the sector. When you look at the totality of the oil share index, also the listing of Arada also helped to move that sector of the index high. And for an index that is doing about 31 point something %, I think it seems to be the only good news in terms of economic good good news in terms of dealing with inflation. Even if you say today, inflation is 33 point something percent. And so in terms of return, I think the All-Share Index might not have been able to beat inflation, but also by being able to minimize inflation in terms if you are an investor in the market. But again, like you said, if you look at capital gain, some of these stocks that we're talking about Rwanda, you're talking about Arada, you're talking about the banking sectors, GTB, that is Gitco, and Guarantee Trust Company holding, Guarantee Trust Bank holding company. You can see how it has moved to an all-time high, closing the market last week at 56. Zenith also is moving towards the 44 naira mark. You see also UBA moving back to 35 naira from we close at 33 naira. You see Access Bank also doing 52-week high of about 24 naira 15. So you are seeing those kind of movement also. Those have really helped get a lot of investors excited. And the whole idea why investors are being excited is during this time of activities like this, historically, it has seen that there's a slowdown in terms of price movement, especially when those offers come to an end. Investors tend to relax, to wait for the next number. Some of them tend to trade in some of those equity, trying to go into other equity, and you see the price depression coming. But for the first time in the history of the index, when you're having public offer, right issue going on, you seem to see that once these issues are completed, you see the price moved. You've seen that in Owando. I mean, even if Owando is not doing the right issue, we've seen that in Nigerian Brewery. We've seen that also in the banking stock like Zenith Bank, Fidelity Bank, and GTCO. We've seen how those, despite they're coming to the market and then getting funds, ordinarily the price should depress, but we're seeing a price movement. So that tells you that a lot of investors are having confidence in the market, and so that is good for the market.
So when you now look at the 30.69% year-to-date return on the all-share index, would you consider that impressive, or would you still say that investors should still be cautious with their investments?
Well, it depends on which device you are. If you talk about being cautious, well, like this, you say the totality of the all-share index, and what has really driven down this index, you should know, is the oil and gas sector. Some of the oil and gas. I mean, what has driven down the index normally is the conglomerate. You've seen Dangote come down. You've seen Transcorp Power come down. You've seen MTN also come down. You've seen Airtel come down. Those are what have driven the index to where they are, where the 32 point something percent, yes, 30.6% that you're saying. But when you look at other equities, you look at the GTCO, you look at the Zenith Bank, you look at the Access Bank, you've seen that those stocks have grown in terms of leaps and bounds. They have moved from the low of about 30 naira at the beginning of the year and selling at 45 naira. Even though Owando have moved from a low of about 8 naira to a high of about 89 naira before we are seeing it as a sum. So when you look at the all-share index, it could be deceptive. Where you are not looking at individual equity. So with the question you asked, should there be cautious? It depends on which type of equity that you have. For an equity that has gained over 100 and something percent, yes, it may call for cautious, and that's why you are seeing those rebalancing. But for an equity that have lost its steam, it may call for a good entry point, because it means that there's still a lot to be gained from that equity. So it depends on which side of the device that you are in, to be cautious or not to be cautious, depending on which equity you are playing on.
Okay, so you said that the stocks are growing. I want to believe in terms of value, but in terms of trading volumes, the market saw a decline, compared to what we tracked previous week. So what is the shift there? How sustainable can this be, and how can we ensure a balance?
When you talk about volume, I think if you talk about week to week, you've seen a decline in volume. But if you talk about month to month, you've seen an increase in terms of volume. That is what you should know. Then secondly, again, you just said it, and like I said, foreign investors also left the market, and most of those movements may have been done in the past 2 weeks or thereabouts. So you see those decline in terms of volume because a lot of them are leaving. But mostly what is driving this, like I told you, some investors have really gained so much in terms of price. And Owando that have gained over 500 and something percent, a GTCO that has almost gained almost 80-something percent, and Access Bank also that has gained so much. So what you're seeing, that what you said here is portfolio rebalancing. You see some investors are trying to be cautious in terms of moving some of their funds out of the equity market into the fixed income space, even if the return they will get there, but they think that is the most stable return compared to being the volatility that you see in the equity market. I think that is the challenge that we are having now when you see some of those, what you just made mention in terms of volume. But again, like I said, sometimes those volume could be attributed for investors going out looking for a good entry point. They may exit in terms of volume, but you see them coming back when they see that the prices are good. Also, they will now be able to gain in terms of price appreciation and buy and buy volume also.
Okay, so it seems to be looking good for these stocks anyway. But then to wrap things up, Muktar, in terms of market liquidity, what should we be looking out for in terms of, ensuring that there's fluidity in this market? Because we've seen a lot of fluctuations over time. There will be times that, there will be a rise, an appreciation in the volumes of the market, so to speak. There at some point there's a huge crash. So when we talk about, liquidity and stability, probably for a longer period, what should we be aiming for?
First and foremost, I will address the liquidity and stability that you're talking about. First and foremost, you must understand that the stock market is not a straight line. Mm-hmm. It's a curve. So you see the ups, you see the downs. So that's the stock market for you. So that is not unusual. Well, in short, it should be very, very unusual when you see that the lines are all straight, not having that curve. Now, to address the area where you talk about liquidity and stability, that is where the foreign investor come in.
Okay.
Because they are the ones that come in there to have a time frame of over 6 months or 1 year at a particular equity, then you will see that there will be a lot of liquidity and stability. Now, when you have retail investors being the ones that are playing, not even Nigerian institutional investors, you should be ready for those ups and downs, because a lot of retail investors normally invest maybe for the short time, even if they are looking.
All right.